In recent years, Italy's economy has shown signs of remarkable growth, surprising even the most skeptical observers. Indicators such as GDP growth and employment rates have reached levels not seen in decades, suggesting a significant rebound after the pandemic. By certain metrics, Italy has even outperformed major European counterparts like France and Germany, positioning itself as an unexpected success story. On the surface, these developments paint a picture of economic revival and resilience. However, beneath this seemingly bright outlook lie structural vulnerabilities and deep-rooted issues that cast a shadow over the country's future. But why then are so many economists issuing warnings about a potential economic collapse after 2026? And why does the average Italian, despite these positive statistics, still feel that the country isn't genuinely on a stable path to long-term prosperity? The answer lies in the fragile and somewhat artificial foundation upon which this recent growth has been constructed, exposing risks that could jeopardize the nation's future economic stability. Italy's recent economic boost has been heavily driven by the construction sector, a vital component of the country's overall GDP. Yet, this sector's remarkable performance didn't occur organically or as a result of structural improvements. Instead, it has been fueled by a series of government incentives, most notably the Superbonus, which offered significant tax rebates for energy-efficient renovations, seismic upgrades, and other building enhancements. These incentives unleashed a wave of activity, particularly in residential construction, propelling the sector to new heights. This construction boom was further bolstered by funds from the Next Generation EU program allocated through Italy's National Recovery and Resilience Plan, PNRR. These programs provided additional financial injections, creating temporary demand and enabling projects that might otherwise have been delayed or abandoned. However, these measures were never intended to be permanent solutions. Both the Superbonus and PNRR initiatives are scheduled to phase out by 2026. Without these financial supports, the driving force behind Italy's recent growth will likely dissipate, leaving the construction sector and, by extension, the broader economy vulnerable to stagnation or decline. Despite these positive macroeconomic indicators, many Italians remain skeptical about the country's trajectory, and for good reason. The widespread perception of economic stagnation persists, as ordinary citizens struggle to reconcile the data with their day-to-day experiences. For many, wages remain stagnant. The cost of living continues to rise, and opportunities for upward mobility appear limited. This disconnect between statistical growth and lived reality stems from the nature of Italy's recent successes, which have been artificially inflated by temporary measures rather than driven by genuine, sustainable structural improvements. Historically, the Italian economy has been plagued by periods of stagnation, with growth hovering near zero for much of the past 2 decades. The fear now is that once these temporary supports are removed, Italy will not only revert to its pre-2020 state but may even face a deeper economic downturn. Another significant challenge on the horizon is Italy's mounting national debt. While the incentives and recovery programs have undoubtedly provided a short-term boost, they have come at a steep cost. The government has had to borrow heavily to fund these measures, pushing public debt to levels that are becoming increasingly unsustainable, particularly in an environment of rising interest rates. After 2026, when the economy is no longer propped up by incentives and recovery funds, the Italian government will face some tough choices. To prevent a debt crisis, public spending will need to be curtailed significantly, which could further suppress economic growth. This combination of stagnating GDP and high debt repayments risks creating a vicious cycle that could ultimately lead to what many economists describe as an economic collapse. Although the outlook appears challenging, a collapse is far from inevitable. Many economists argue that Italy has a critical opportunity to pivot toward a more sustainable economic model. The country must leverage the remaining PNRR funds strategically, focusing on long-term investments that address deep-rooted structural issues. By doing so, Italy could lay the groundwork for a more resilient and competitive economy. The cornerstone of this strategy lies in innovation and modernization. Over the past decade, Italy has lagged behind other major economies in terms of technological advancement and industrial competitiveness. To close this gap, the country must prioritize investments in emerging sectors such as green technology, digital transformation, and artificial intelligence. These areas have the potential to create new industries, drive productivity, and generate high-quality jobs that can sustain long-term growth. Equally important is the need to reform Italy's labor market, which, despite recent improvements, still falls short of European standards. Employment rates remain disproportionately low, particularly among women, young people, and residents of southern Italy. Targeted labor policies coupled with upskilling and reskilling programs could help bridge these gaps, making the workforce more dynamic and responsive to the demands of a modern economy. Education is another crucial area for intervention. Italy must invest in its schools, universities, and vocational training programs to ensure that future generations are equipped with the skills needed to compete in an increasingly globalized and technology-driven world. Addressing these deficiencies would not only enhance individual career prospects, but also strengthen the nation's overall economic foundation. One of the most significant obstacles to meaningful reform is Italy's historical tendency to prioritize short-term gains over long-term stability. Measures like the Superbonus, while effective in providing immediate economic relief, do little to address the underlying issues that have hampered the country's growth for decades. Economists warn that Italy must resist the temptation to rely on quick fixes and instead focus on creating a stable, innovation-driven economy that can weather future challenges. This requires a shift in mindset, with policymakers, businesses, and citizens working together to pursue strategies that prioritize sustainability over expediency. A failure to address its structural issues could have ripple effects far beyond its borders, potentially destabilizing the EU's economic foundation. At the same time, Italy has demonstrated remarkable resilience throughout its history. From the economic miracle of the post-war years to its recovery after the 2008 financial crisis, the country has repeatedly shown its ability to adapt and rebound. However, the stakes are arguably higher now than ever before, and the window for decisive action is rapidly closing. What do you think? Can Italy overcome its challenges and pave the way for a brighter future, or is a collapse inevitable? Let us know your thoughts in the comments below. Don't forget to like, subscribe, and hit the notification bell for more videos like this. See you in the next video.